This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 12, 2026, and this is the After Hours session. Now, let's get into it. The S&P 500 closed lower today as the market digested a CPI print that was technically in line with expectations, yet failed to quell broader anxiety. With the crypto fear and greed index sitting at an extreme low of 14 out of 100, investors are bracing for a potential rebound in core inflation as we head into tomorrow's producer price index data.
Let's look at the numbers. The S&P 500 tracked by SPY closed at $77.56, down 32 basis points for the day. The Nasdaq 100 tracked by QQQ fared slightly worse, closing at $718.45, down 34 basis points. The Dow Jones tracked by Diamonds settled at $537.28, also down 32 basis points. Small caps bucked the trend with the Russell 2000 tracked by IWM, gaining 34 basis points to close at $300.99.
Grid, thanks. Let's see what moved the needle on the corporate side.
Corporate activity was light on major earnings surprises today, but the sector headlines were telling. Core Scientific turned lower after its fourth quarter results disappointed, highlighting the ongoing pressure on Bitcoin miners who are now earning less than 0.7% of their revenue from fees, a 10-year low. This underscores the fragility of the crypto mining infrastructure as hash rates climb but fee revenue collapses.
Clear picture on the corporate front. Pulse, walk us through the macro data that drove today's volatility. The headline event today was the release of the Consumer Price Index. The data came in line with expectations, which theoretically should have been supportive. However, the market reaction was muted to negative. The reason lies in the composition. While headline CPI was steady, Goldman Sachs is calling attention to the fact that core PCE, the Federal Reserve's preferred gauge, is likely to show hotter readings in the upcoming report. So, the relief rally didn't materialize because the core inflation story remains intact. Spectre, what's on the risk radar?
Risk is elevated. The VIX, which closed yesterday at 15.46, is reflecting a shift from calm to a mixed regime. More concerning is the crypto fear and greed index at 14 out of 100. That is extreme fear. We are seeing a correlation breakdown where traditional safe havens like gold are being watched closely as hedges against this specific type of systemic anxiety. With the dollar strengthening and rates sticky, the risk desk is flagging that any miss on tomorrow's PPI could trigger a sharper repricing of duration risk.
Understood. Apex, give us the look ahead.
3 things to watch. First, the VIX and the dollar. If the dollar continues to strengthen against the yen and euro, it will keep pressure on multinational earnings and equities. Second, the core PCE narrative. Goldman's warning suggests that today's CPI was a reprieve, not a resolution. Third, Bitcoin. With the fear index at 14 and miners struggling, Bitcoin is likely to remain suppressed until hash rate profitability stabilizes.
A decisive close to a cautious day. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.